Howdy, lieutenants and economists.
The most volatile, evil, disgusting things on the planet, humans. If you have a video request, you can always go to assholeconsulting.com.
Yeah, I am gonna charge you, kids. And that is the importance of not fucking up.
You are such an asshole!
Hey everybody, the old captain here, and I'm in Florida and I'm sick. And they all went to the beach. I can't go to the beach. You wanna know why I can't go to the beach? Because I got a ton of work to do, that's why. I don't feel bad because I'm not even down here for the beach. I'm down here for the IndyCar races. I didn't even want to come down, but I'm like, when am I going to see IndyCar races again? It may not be down in St. Petersburg. And the only reason I can pull off coming down is because I get free lodging in St. Petersburg. So anyway, we ain't got time to go to the beach. I will be going to the beach after this. We got to do work. Work is right first. So we have a question, very, very good question, very applicable question to everybody who's interested in investing, but also especially the younger people, Gen X, Gen Y, and Millennials. This comes from a young man. Hello, Mr. Cleary. I'm a 25-year-old communications grad. I'm enlisted in the U.S. Army. I'm currently training for Signal AIT, something in the Army. At present, I place 15% of my income into the military Roth IRA, which is called the Thrift Savings Plan, and another 10% I place in my savings account. My question is, if stocks are grossly overvalued and 401ks are essentially useless, what can I do to invest my money now and better prepare for retirement? Okay, and here's the thing. I cannot provide people specific investment advice. All I can do is explain to you what's happening in the economy and what I would personally do, right? That's it. And as everything, and you gotta understand this about finance and investing, there's no way to predict the future. None whatsoever. So what I'm going to do is I'm going to explain what's going on so you understand, and then say, okay, here are the options as far as I can tell, and frankly, none of them look good. None of them, right? So let's go ahead and take a look and see what's going on and see what our options are. All right. The first thing you have to realize is that there are multiple things affecting the United States right now that essentially have inflated the prices of pretty much all securities or investments, stocks, bonds, mutual funds, real estate investment trusts, whatever, right? And all this money has flooded the market, and that has put prices way higher relative to the earnings and profits these stocks, bonds, and mutual funds and dividend that they pay out. And I've done this before looking at the PE ratio and dividend yields, but you're essentially, ever so roughly, paying twice the price today that you were roughly 40, 50 years ago for the same dollar in earnings or the same dollar in dividends. So it is a bubble. It may not ever crash. This may be the new normal. But money has been flooding the market for various reasons, which we'll go over. And you're essentially paying like $800 for a PlayStation 4, paying $6.50 for a gallon of gas, or paying $800 for a new high-end, well, not really high-end, I guess, average cell phone, right? Now, the primary and longest running reason that stocks and bond, all this stuff is overvalued is the baby boomers, and more recently Gen X, specifically retirement programs, 401ks, IRAs, 403bs, all this other stuff. Government comes in and says, we'll just help, we want to help. Well, fuck, we don't know anything because we're government workers and sociology majors and rich people who came from rich money like George Bush and Nancy Pelosi. Hi. So they're not economists, they didn't think this one through, and they just said, well, what we'll do is we'll give you tax benefits, tax write-offs, if you invest in a 401k and IRA. And what are the investments we're going to make? Well, they could be ETFs, stocks, bonds, mutual funds. Never mind if these things are worth investing, never mind if they pay out a high enough dividend or they make enough earnings. We're just going to tell people to invest in these stocks. And people, being the dumb shit sheeple that they are, did. So the baby boomers over the course of, 40 years almost, have been flooding the stock market with retirement dollars into their 401ks and IRAs. Gen X is doing the same, and because now some of us are actually maybe sort of making money, we could actually invest. And you millennials are just plain fucked because you don't have money, you have student loans. Even if you had the money to invest, again, you're buying into a market that's twice as inflated. Another thing that is occurring is called quantitative easing. This is the Federal Reserve. Essentially what they do, I'm simplifying this a lot, they print off money, they then buy these shitty investments from the banks, the shitty loans, the mortgages, the treasury securities, and all these other crap securities, crap investments. They take those crap investments off the balance sheets, off the hands of the banks. Now it's on the balance sheet of the Federal Reserve. You can look up the balance sheet of the Federal Reserve if you want. And then these banks take all this cash. A lot of them recapitalized earlier on because bankers are shit-tacularly stupid. And they had that whole housing bubble thing. But now they're saying, well, we got an excess of cash, but the economy isn't exactly booming. So what do they got to do with this extra money? They just can't let it sit there. So they go and they invest it in the stock market to get some kind of rate of return. So there's hundreds of billions at least being funneled more recently into the stock market, again causing stock prices to go up, regardless of earnings or the underlying fundamentals and worth of that company. Also related to Federal Reserve and monetary policy is low interest rates. Interest rates are very low, and banks, not banks, but corporations are looking to say, hey, we got to pay out how much in dividends? We got to pay out how much? We got to pay the investment bank how much to issue stock? Or, there's a cost of capital. I won't go into the boring details. They're saying, well, instead of paying out those dividends and dealing with all these shareholders, let's just buy back the shares of our stock. Because we can borrow at 3 and we can go ahead and get an increase on the price of stock by 10, 15, depending on how much you buy back. And again, hundreds of billions, if not, maybe it's even approaching $1 trillion. I have to look at the figures again. Where that money, the buyback money is going in. So companies are leveraging up, they're borrowing money, they're taking that money, buying back all their shares, stock price goes up, everyone jerks off their dividends, corporate executives make even more money. And by the way, I'm actually for that. I'm just saying prices go up regardless of what the earnings are. And then finally, we have the United States having the US dollar, which is the world's reserve currency. Everybody is flooding the US with their foreign currency because countries are even shittier than ours. So we could borrow more money, we're awash with money, and again, some foreigners, they don't want to just hold dollars. They would like to get a certain rate of return, so they buy our stocks, they buy our bonds, again, flooding the market with money, driving prices up, but interest, income, and earnings and dividends stay down here. So that's what. So everything is pretty much overvalued relative to what it used to be, right? And you can look up dividend yields and PE ratios and see what I'm talking about if you want to look at that. So what do you invest in? Well, here's the problem. I wouldn't invest in anything. You guys know me. I'm a minimalist, and all I've been doing is I've been buying guns. But you can't buy that many guns. I got enough ammo, got enough guns. I've been slowly making my position in silver and gold. Not gold because I can't afford gold. But the key thing, pay off that debt. Pay off that freaking debt. That's what I'm doing. I am paying off my debt because paying off debt is the only true risk-free investment. So if you have a mortgage or a car loan or a credit card, a mortgage is what, 4.5%, 4% nowadays. Car loan, what, 7, 8, 9, 10%? Credit cards, good Lord, that could be up to 24%. Pay that motherfucking shit off because there's no risk in that, and you essentially saved your interest rate. You don't get a check, but you were saving yourself future income. It's the same thing, same net effect. Actually, probably even better because you don't, well, except mortgages, you get to write those off, but you got to pay taxes on your interest income. You don't pay taxes on interest you save. All right, so it's a slightly higher stated effective rate of return, and especially paying off those credit card debts. So if you have any debt, get rid of that shit. Student debt, get rid of that shit. And that is the only risk-free investment. That's the only thing that's risk-free. That's the only thing no one gets in trouble paying off debt. There's these people who are more risky. They say, well, you should borrow as much money as you can for the stock market. Pay only 4% and then you make 20%. Yeah, good luck. What happens if the stock market crashes? See, no one thinks about that. But anyway. So that's the only thing I can safely recommend. The rest of this, you got to realize you're buying into every asset category has been inflated by the 4 aforementioned factors that's going to be going on. And nothing can guarantee that these factors won't continue on in the future. All of a sudden, stock markets crash. So I can't promise you anything, but here's what it is. What you can't assume. If the world continues to be shittier than the U.S., even though the U.S. is spectacularly shitty, this world reserve currency will act as like kind of a backstop. And again, I'm really simplifying a lot. I don't want to bore people with boring economic detail. So you can always assume that it is, you can't always assume. If that holds true, we will essentially be the new normal. But it won't hold true forever, because all it would take is China or Russia forming an alternative world reserve currency, and then and this backstop ends, and the flood of foreign money stops. But as it looks now, given the strength of the US dollar and the relative less suckiness of the United States finances and culture and corruption as well, it looks like people want to invest in the United States. So that provides some stability to our financial markets and stock prices and bonds and whatever else. So if that holds true, which we don't know if it will, it's basically the same traditional investment strategy. The younger you are, the higher risk investments you want, because you have a longer period of time for the markets to suffer the ups and downs. If you are like some clients I have who come talk to me and you're 55, say, well, I think it's time to get serious about retirement planning. So do I invest in international, foreign, aggressive growth stocks? Like, no, you're fucked. You invest in bonds and you work until like you're 80, and then maybe you're lucky. So the younger you are, if you're a millennial, and if you're one of the lucky few that has extra cash to invest, you would traditionally invest in higher risk growth. Okay, yeah, it's going to go up and down, and yeah, 80% of your stocks could lose money and go completely bankrupt. But that 20%, like in the dot-com days, you didn't have to invest in one or two, but if you invested in all of them, all that you needed to do was invest in Google, Yahoo, or Amazon, and you could have lost everything else on all of your investments. Those have grown so much in terms of stock price that would compensate for it. So what is high risk? Well, international, because you're dealing with additional risk of currency exchange. Also, you presumably, if you're foreign and overseas, they're growing faster than the established Western economies. Stocks are riskier than bonds, and you would also want to probably invest in aggressive growth stocks. These are your startups, technologies, stuff like that. Again, they could all go belly up. They may not get approval from the FDA for their new drug. That's kind of what you're looking at. If you are less if you're more risk averse, you don't want as much risk, you can always invest what they call blue chips. Again, no guarantee they're going to go up. They're just got less debt, and they're more established firms like Colgate. Everybody buys toothpaste. Heinz ketchup was bought by Kraft. Everybody buys ketchup and that fake cheese that comes out of Lord knows where. I'm just trying to think what else. Just these standard companies that aren't exciting. They're not exotic like Facebook or Google. They're just, look at your everyday purchases that you make and say, oh, what company makes that? Look on the back. Oh, Samsung makes this. Well, okay, I'll go there. The other thing that you may want to look at, this is me personally, I would look at high dividends. Now you say, what are dividends? Dividends are the only thing a shareholder ever sees from a stock. Well, what if I sell it? Then do I get money? Yes, you do. But you're no longer a shareholder, are you? The only thing that gives the stock value is the dividends it pays off. That's the only thing it ever pays. And then when a company buys it out, and then you take your shares, you get a new share of a new company that's merged. Guess what only gives that stock value? That's fucking right, dividends. You don't even see all the earnings of the firm. You only see the dividends. Right? So being a traditional fundamental investor, I look at dividends. It's like the interest rate. Would you take bond? Everyone bitches and whines about, I only make 2% on my savings account. Yeah, technically, given the dividend yield ratio, you only make 2% on stocks today as well. But everyone's all focused on capital gains. It's look up a post I called "Capital Gains Do Not Exist." It's a very interesting. Maybe it was a video. I don't know. But that's just me. I mean, maybe you want to go for capital gains, all right? Well, I look at dividends. I want to know. And there are some stocks, there are even some mutual funds that specialize in stocks. Mutual funds is just a group of stocks, and sometimes bonds as well. They will specialize in a certain type of stock. And so you can find mutual funds that only invest in high dividend paying stocks. It's up there. Then another investment group, again, not guaranteeing anything, you can invest in what are called real estate investment trusts. If you don't have a house or you can't afford a house, you can invest in what is essentially a mutual fund of properties. And that's all a real estate investment trust is, except it's a bit more exotic and a bit more diversified. They're not just buying your cookie cutter single family homes, they're buying farmland, skyscrapers, malls, strip malls, you name it, any kind of land, any kind of property, they'll buy it and they'll manage their portfolio. Again, like mutual funds, real estate investment trusts may specialize in certain subcategories. Some will be only commercial properties. Some will only be residential. Some will be, we're only on the East Coast. Some will only do condo development in Florida. Whatever it is, there's many of them, so you want to investigate those and take a look at them. But then outside of these investments that you would make into your 401ks, IRAs, 403bs, thrift saving plans, and get your tax benefit, the risk with those is what we saw in Cyprus, Argentina, Bulgaria, and Poland. Even the Democrats were talking about this, and that is they may confiscate your fucking 401k or IRA, or they may at least renege on the tax benefits. Right? And I'm not going to go into detail about what are the tax. We don't have time for that. I have classes online. You can look them up and go delve into it because it's way more complicated than you think. But a true and genuine risk that you got to think about, especially given the financial problems of the United States, and especially if we lose reserve currency status, is there's about, what is it? It changes with the stock market. 10 trillion, 18 trillion, I forget. There's a lot of money parked in retirement accounts. And those Democrats and socialists, and I'm not being political because you will not hear Republicans say this, it is the Democrats and the socialists that are all salivating at the mouth thinking, we can tax those and buy votes with them. We can pay for all this. Ooh, that's not your money. You didn't invest. You didn't earn that. You didn't build that. I mean, this is serious shit, man. You guys you young kids who all have Obama's dick in your mouth, you have got to wake up. Because you're the ones that are going to get most fucked over by him. He'll be dead by the time you realize you'll be 50. You'll be like, what happened? Oh, baby. You'll be like, God. It'll be like, oh, baby. You won't even have your teeth anymore. Anyway, so assuming that risk, what can you invest in? Well, outside retirement plans, you can invest in a house. It really depends on your life. I'm not a big fan of owning a house, even though I own one. It's just, that's what I was told to do. I'm not perfect. I made mistakes earlier, learned from them. But again, make sure you're going to settle down in that house. You're going to live there for a while. And honest, do not buy a house in a liberal or Democrat area. They will jack up your property taxes to the point that you rent from the state or the county or the city. I mean, Minneapolis, you don't own your house. You don't. You rent it from the city. All right? And the more liberals and the more leftists and the more children, and it's always for the children because that's where the majority of your property taxes go, is for the education racket. You find retirement communities where old people without children are and vote down those motherfucking levies. All right? And you got to do your demographics, make sure that the freaking ghetto doesn't go in and consume your house. It's very risky, very risky. But you got to live somewhere, and technically, if you live there long enough, you're not wasting rent, and you will have an asset by the time you retire or you're in your 50s or something like that that'll help in retirement. The other thing, I would be looking at precious metals. You may want to look at that simply because it's something to have. You're not, you could spend, what is it, $15, $16 an ounce for silver. Let's say it goes back down to $3. At least you have that insurance. That's something to hedge against shit going wrong. And it's sad, but the markets are so overvalued that you don't look at investments that provide a rate of return higher than the real value of what you invested at that point in time. But I have more faith in insurance where it's like, I don't trust the future of the country. If you don't trust the future of the country, invest in insurance type assets. So silver and gold, they don't pay dividends. They could go down in value. Expect to lose all your money in those investments. But I would have some modicum. And I only recommend about $4,000 or what, because the price changes. We calculate, I think it's 200 pieces of silver. You too, Judas? Or no, you too? Who's the dude that traded in Jesus for the silver? Was it Judas? Maybe I gotta go back to Bible school. That's what the internet's for. And I won't look it up here. So, 200 pieces of silver. You can always get more. But yeah. Otherwise, yeah, it sucks. Oh, one final thing. I apologize, got ahead of myself. Think about investing in a skill or a trade. And the reason I say that is because a skill or a trade you can barter for down the road when you're older. And a skill and a trade cannot be taken from you, and you can always control the valve as to how much you work, ergo how much you're taxed. So if you can weld or you can fix cars, dude, go talk. You can easily barter with a dentist to do your dental work or a doctor to take a look at you. I mean, when I taught ballroom dance, didn't do a ton of bartering, but what was it? It wasn't even dental work. Was it food? Somebody gave me a ton of food if I taught them how to dance. like they fed me for a month or something like that. So some kind of trade or skill that's going to be useful down the road, that you can barter and piecemeal off in case the government gets confiscatory. But yeah, so I would kind of pay off all your debts, get a position in some precious metals, maybe get a skill or a trade, and then, boy, wait for the market to take a dip, wait for it to crash, and then buy. I mean, then you got to park your money somewhere, and then you're looking at like, 401ks, IRAs, and all the risks that come with it. Buying into an overinflated market, and then the potential for it to be confiscated. So I wish I could promise you something. I wish I could say it with confidence, this is what you got to do. But the only thing I can say with 100% confidence is pay off your debts. That's it. That's all I can say. So anyway, hope that helps out for you youngins. Toodles.